Hello and welcome to today's episode of DIFC Unplugged. I'm Jonathan Beardall, Head of Wealth and Asset Management for the DIFC Authority. Today we're going to be talking about exploring private credit growth with PwC and DIFC. Today I'm joined by Sohail Shaikh, a senior leader from PwC in the Middle East.
Glad to be here, Jonathan, and looking forward to the discussion.
Hi Sohail, to start off, it'd be great for you to introduce yourself and talk a little bit about the business in Dubai and in DIFC and PwC's global organisation and why you're here today.
Thank you, Jonathan, for having me here. It's actually my first year in the region, but PwC is a long-standing institution and have a long history in the Middle East. We are the fastest growing practice amongst the network in the region. And I've come to the Middle East in the last 1 year to lead our sort of what we call as the credit advisory business. So we advise financial service institutions, be it hedge funds, private equity houses, private credit houses, banks and traditional financial institutions around credit advisory, secondary loan transactions, portfolio restructuring, collections and recovery. So it's a one-stop shop for institutions who are looking for credit solutions. And I'm glad to be here.
Fantastic. Now, I understand PwC recently published a private credit paper in partnership with DIFC. Could you first explain what private credit is to the listeners who may not be so familiar with it?
Yeah, that's a very good question. People often know private equity because it's so well known and has been around for a long period of time. Private credit essentially is basically credit financing from non-bank institutions. Usually people go to banks and get loans, but what happened after 2008 financial crisis, traditional financial institutions stepped back from lending because of various reasons amongst many things, but the one primary driver was a regulatory framework. Investors identified the opportunity to plug that gap, and they started lending through non-banking financial institutions. So essentially, private credit came into sort of existence around that point in time. You can get any type of credit. You can get direct lending. You can get mezzanine financing, which is a combination of debt and credit. You can also get distressed debt financing and special sets. So private credit is a broad term, it's a family term, I would say, to get credit across a number of different types of loans. As I mentioned earlier, since 2008, the market has grown tremendously. I think it's now 1.6 trillion assets under management globally. So it's no longer sort of the new kid on the block. It's a fairly mature asset class which investors can get exposure to.
So why did PwC decide to publish this report now? What are the opportunities for private credit within the Middle East?
That's a very good question. I feel I've been in this business for the last 16, 17 years now. And what we are seeing in the Middle East is the whole region is at an inflection point from the perspective of private credit. We see the opportunity for private credit to grow exponentially within the region over the next sort of 5 to 6 years. And the reasons are pretty obvious. If you look at the demand for diversification across the Middle Eastern economies, it's huge. Countries want to sort of not rely on oil and gas revenues, and they want to diversify into other sectors. So we expect from our research, it's quite obvious that the demand for credit will continue to grow. We also at the same time believe traditional financial institutions will not be able to meet that demand. Because traditionally, when you're going into different sectors, the tailoring of credit solutions requires you to provide bespoke solutions, which creates a perfect opportunity for private credit to come in. If there is any evidence in the past, if we look at APAC, if you look at how US has grown, today Middle East is about 4 to 5 billion in terms of asset management. We will get to about 5 billion by the end of the year. But we see the potential for the market to grow at about 15 to 20% for the next 6 years. And if compounding is the eighth wonder of the world, we expect the market to be around 30 billion by 2030. So a nearly 4x increase, which is what excites me in terms of the growth of private credit.
How does the Middle East private credit growth compare to the more established markets like the US, Europe, Asia Pacific?
It's a very good question. I think the genesis of the private credit, or the catalyst, I would say, happened in 2008 financial crisis. And US actually took the lead. US is about, as I said earlier, the total market is about 1.6 trillion, and US accounts for 1 trillion of those assets under management. Europe is about 450 billion, and if you look at the trajectory of European market, it's going to grow from 450 billion to nearly 850 billion over the next few years. So it's still growing and growing quite exponentially. One of the most interesting market to compare to, I would say, is Asia Pac. And I think I would expect Middle Eastern growth to look somewhat similar. And the APAC market has grown at about 20% per annum over the last 5 years. And conservatively, I think if that were to happen, you would see the quadrupling of the market in the next 5 years in the Middle East. So it's a fairly new market. It's a fairly nascent market. There has been only one big secondary loan transactions in the region. We might see a few more coming in this space. Secondary loan transactions are basically transactions where banks would sell the loan to private credit institutions. And we are seeing more and more of that. We are seeing international institutional investors coming to Middle East, wanting to have an exposure to the Middle Eastern market, which is happening at a pace which we expect to pick up over the coming years.
That's really insightful. Thank you very much. Could you just share a little bit more about which sectors are driving that demand within the Middle East?
Again, I think anything outside of oil and gas, I would say, is an area of focus. But I would call out 4 key sectors. Real estate is being one of them. Infrastructure, healthcare, and transportation. Transportation around technology-enabled transportation. So four key sectors primarily. But the main, if you look at the type of industries which is driving this demand. The Middle East, any economy, SMEs are the backbone of any economy. And within the Middle Eastern context, you will have small and medium-sized enterprises popping up to support these diversified industries. And SME financing is the one which is typically high-cost credit for banking institutions. And it creates a very nice opportunity for private credit funds to step in and plug in the funding gap which might be created as a result of the demand for credit. So within the sectors, I think those are the 4 key sectors. But generally speaking, I would expect the small and medium-sized enterprises to drive the demand for private credit.
Finally, one important question from my side. What role do you see DIFC in the wider ecosystem within the Middle East playing in supporting the role of private credit growth?
Again, very important question to address. I think the 3 aspects I feel DIFC will enable the growth of private credit within UAE, within Dubai specifically. From a regulatory and a legal perspective, investors want familiar jurisdiction, known framework, and that is something which DIFC provides today. Actually, Dubai is quite unique because you get the benefit of having what I call as creditor-friendly jurisdictions. When you're investing in credit, what you want as a credit investor is to be able to have certainty of outcomes, like any investor wants, and DIFC and the framework around UAE provides that. The recent insolvency law, which came into existence since May 2024, also actually allows investors to exercise the security they might have on a particular loan. So all in all, I think there is already the foundation for private credit institutions, whether they're in the US, whether they're in Europe or APAC, to move to somewhere like the DIFC in order to deploy capital across the Middle East. So I feel DIFC is doing a good job now. Now it's just a case of actually going after the institutional investors to make the case that yes, there is opportunity here and they can be based out of here.
Sohail, thank you so much for your insights today. Fascinating discussion. I really enjoyed it from my part. It's clear that private credit's not going anywhere. It's going to have tremendous potential here in the Middle East, and I look forward to working with DIFC and PwC to further grow that. Thank you to our viewers. Please be sure for more information to check out PwC's private credit report, and please join us for the next episode of DIFC Unplugged. Thank you.